Good evening. Ira Epstein with your Spider ETF subscriber video for this Tuesday, and we are on the 12th of April, 2022. Well, I'll tell you, it was a head fake day. Everything was fine. You got the government report on CPI. It came out close to expectations, a little hot on the month-to-month, but on the core, it was down. And the market looked at that and made up its mind, that's the opening. Maybe this is the peak, and with that, you took off in stock indices. And everything was fine, in my opinion, until, by the way, there was more bullish news before I get to this point. The energies took off, $6 higher, $4 higher most of the session, climbing in the energies because Shanghai, the word is that they're coming out of their shut-in. They'll start with the financial district to open up gradually, and then they'll spread it to the other 25 million people in the country, whatever. But that's a good sign. So the market built up on that, and it said, okay, we're getting some positive news. The party had rain come on it when Lael Brainerd, the new about-to-be Fed vice chair, said, no, we're coming out with a half-point hike in June, maybe after that, and we're going to be running off the balance sheet. So as good as this was, reality steps back in. So all the euphoria pulled out, and before you knew it, you were busting and going down to almost the lows, if not the lows of the day, in stock indices in the last 2 hours, 2.5 hours of trade. It was a real turnaround. But you're at key numbers. You went down, hit the lower Bollinger Bands, and you're coming back up already tonight. Those Bollinger Bands are a difficult, unusual beast if you can learn to tame them and understand them. So when we come over to Twitter, I'm still thinking you can fill the gap. The market certainly acts like there's a weight on it that wants to bring it down there. Okay, when it fills it, there's nothing bearish after that. And why? Because you still have higher lows. Even if you fill this right through here, you still got higher lows, higher high. The market's coming down maybe to reach to the 18-day moving average of closes. You hit the 200, you're pulling back, and what stopped the market was the combination when the Bollinger Band got up into this area with it, and it pulled the market back. That's all that's happened. Has the chart picture been damaged? No, it is still bullish, trying to fill a gap, and will have a legacy of what it tries to do as this goes on. Momentum down, you had developed, and I had mentioned this to you, what's called an embedded reading. And if you learn how to work with this, when you get these embedded readings and you lose them, when the red line closes back under 79, watch. Follow me. There you go. That's setting up the plan under 79. That the market's going to make a run for the closest moving average main one. It's typically the 18. It could have been the 100 because they're underneath the market. Whoops, I didn't want to do that. That's just me. And what the market's done, in fact, that's where I want to be right here, is you're losing the embedded reading with it, and the market could easily be headed lower. And I got the right button. See how that's working its way lower? Very important. I'm not the best weatherman. So when we get to AMC, I've won the day. I don't want to see the stock fall apart. So I'd like to see it start holding in here. I got what I wanted. I told you I thought the market was going to fail. It did. And what I'm not happy about is the AMC management didn't do something with floating money if they needed it. That was time to do it. In Apple, you could work your way lower. I saw today Kramer saying, he loves Apple, loves the company, but he doesn't want a position that's more than 5%, I guess, of his overall portfolio. He doesn't want to watch it every day and worry if it gets beat up. He knows in the end it's going to win. That's his opinion. I'm a chartist. The chart's bearish right now. Pure, simple. It could go a bit lower here. We'll talk on the weekly chart over the weekend what the bigger picture looks like. I don't think you use the daily to do that to begin with. On the Disney area, we just seem to be stuck at the lower Bollinger Band. Now, if you embed, a real problem kicks in. You're not yet. Day one, where both numbers are under 20, you didn't have it yesterday, so you're just very oversold. Should the market clear 133.12, I think it's going to flash a signal to you that it wants to get back up towards that 18-day average of closes. As we come into the XLF, be careful here. The financial services, the big banks start reporting tomorrow morning. And I'm not expecting good numbers, nor is the market. Now, if they get them, it could be a big surprise. Downside target, lower band, you're almost there. So what's it worth playing for to go through those numbers? And if you take out the highs of Monday, right here, that could be the sign at 38.16 that you've made this low and you're going to come into this area to fight a battle between the 18, the 200, and the 100-day average of closes. In the industrial sector, Spider, very oversold. You've hit your targets. It does not have to go any lower from my charting point of view. It can. Would I ever tell a client to press a Bollinger Band? Never going to happen. XSD, again, you hit your lower Bollinger Bands. I'm at a zone where you either embed, which you haven't done yet, where both numbers are going sideways under 20 for at least several days in a row, or I wait for the rallies to see as this market gets away from being oversold. Is it worth doing anything? It needs to get oversold for me to start participating in the bear side. In XHB, okay, you have the contra trend move. You've got the trend up with higher lows, higher highs. You are under the 18-day average and you're embedded. I think the pros are selling this with both hands right now. I think they did it all day. Get the red line at 21 or more, they'll bail. Until that occurs, I think they're hitting the market, looking for the lower Bollinger Band. That's a live target. XLE, what do you do the first time you hit Bollinger Bands and you're not embedded? I think the pros are out. I think today was just another day, if you missed it, to come out. And I know you're going to say, Ira, the energy sector's running away. We're up $6 on the close. We're up another $1 tonight in energy. It's going to keep running. No, it won't. It's not going back to 130 under the current fundamentals. You've already got Russia still producing the oil. Europe is scared to death to do anything about that. They need the energy. It's evident as can be. I doubt the U.S. is going to give Iran a deal that now that Iran, thank God, made a big demand on the U.S. that they want the president to lock in other presidents behind him and Congress, that they won't go back and re-sanction Iran if Iran does something wrong. Do you think that's going to happen? Do you think anybody in American Congress trusts the Iranian government? I mean, you might. I don't. They're terrorists. The government is a terrorist organization, simple as can be. And the Revolutionary Guard, to take them off the terrorist list, when every time something happens in Iraq, they take credit for it, just happened a month ago. They're not terrorists because you need their oil? Okay. GDX. Higher lows, higher high, but you're really caught in that. Don't get me wrong. I think gold's got a ways to go. I mentioned to you last week, and I'm going to say it again, we're only at Tuesday. I think gold's new story is one that can last with inflation. And that won't go away real fast. The Ukrainian war is going to last for a very long time. What do I mean? 6 months, more? That's what I think. Tomorrow you're going to see President Biden's going to give another $750 million allocated. He can do it under the PDA, his discretionary authority, to the Ukraine. This is going to be for heavier artillery, getting it in. I was starting to look tonight, how much have we given them so far? It's about $1.7 billion. It's cheaper than letting them fold. And then Europe is giving. So you've got the big boys going. Germany tonight is deciding what to do about India. There was a threat on their part saying, you know, if India is going to keep doing all this business with Russia and won't condemn them, maybe they shouldn't come to the G7 meeting. So there are cracks in these friendships that are there. They want everybody to join in, but that's from a European perspective. India, in all fairness, has its own perspective, and that's the hardest thing in the political world, to figure out what everybody's best interest is for themselves. When we look at copper, you're still in the bear mode. In order to leave this, you got to get back over the 45.64 level. Do that and you're out of the downtrend. Don't do it. You could drift down to the 43.94, but you're very oversold. I'm not expecting a lot of downside. Plus, I'm paying attention to that if the Shanghai situation is for real, and sooner rather than later, the financial markets are going to reopen and people can go to offices. How far is it before factories reopen? Okay, so just take it through the countryside. Something's brewing. This is still very bearish TLT. You've just latched on. This is the Gorilla Glue trade. It just keeps going until it doesn't go. Now, what it's going to do is take you into a trap. What am I talking about? If it keeps doing this, it'll pull and embed the slow stochastic readings at a level that's an excessive level to the downside. They'll lose that in time, then you'll get your short covering rally. Remember I said it, that's my prediction on it. UUP, I'm just bullish the dollar. It's the currency of choice. We're the economy of choice. We're the ones doing the right things at this point, and thank God for our strong labor market, we're able to do a lot of things. So this market, I don't see peaked out in any manner. FXE is weak. We're going to hear from the European Central Bank very shortly now. I think it's next week is the meeting. And what are they going to do? So we'll see. I've heard some people say, they'll do nothing. I've heard others say they're going to get aggressive on moves. We'll see. The market thinks they're going to do nothing, and that's breaking the market, in my opinion. Nothing being they could raise interest rates and slow the economy. Got to be a little careful with all that. Are we going to embed, which is even more bearish? So day one, both numbers under 20. Day two, Monday. Day three, it's there. So this market on rallies, if you don't take out today's low, probably going to get sold by the pros, something that I'd be watching very, very hard. I talk about this and all the other spiders and ETFs first thing in the morning. Something that we're adding to all that you see behind me is we're adding the Linn research with our paid subscribers. It's $500 a year value. Why? Because if you take a look at this, and we look at all these stock indices, our staff's writing about it. If you look around interest rates, we're writing about it. Metals, we're writing about it from the futures perspective. You do realize these markets are directly tied to what the futures do. That's their underlying value. We want to do that. Same goes with the energy. Same goes with the currencies that you just see me talking about. So we want you to see that. So that is something brand new that's about to start. How do you find out about what we're doing? It's so simple. I created some videos. I explain it all for you in a simple way. Take your cursor, move it up here. An icon will show. Click on it. It'll take you right to the area where all this is explained. Again, I think I've got seasoning. I've got the gray hair. I've been around the horn. I don't walk on water. I'm going to have bad trades. I'm going to have good trades, but I'll give you logic, and I think I can read a chart as good as anybody you'll ever run into. I'm Ira Epstein. You have yourself a great evening. I'll see you tomorrow.